Hello, 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 everyone. It is my favorite time of the year. It is the opening of tax season. I am very excited. I hope you're excited too. First and foremost, my name is Patrice Malloy. If you have not met me, if we haven't had the opportunity to connect yet, I am America's favorite tax strategist and CFO. I am also the owner and founder of Malloy Management Group. We are a boutique financial advisory and consulting firm that empowers women in business to make, master, and multiply their money so that they can create millions at hyper speed and build an unapologetic and unshakable financial legacy. Let's get into the details. Like I said, tax season has officially opened, and that means the opportunity for you to leverage the tax code to the fullest extent for your benefit. Now, obviously, you would like to have, certain insider tips, tricks, etc., at your disposal to be able to do this. But in the event that you don't, I'm going to share some things with you. Okay. Now, here's just a little bit of um, a precaution, right? If you are not at a point where you are just confident in the way that the tax code is being used and you are up to date on all of the changes that have been made in the administration, or as a Senate in the House make all the different changes, etc., and legislation is not at the top of your thought process, I would not necessarily recommend doing these on your own. I highly recommend you connecting with someone who has done this for years, is highly experienced, who understands how to use the tax code, who understands how to calculate credits, deductions, etc., and they can provide the best outcome for you. So that's just my little bit of a precaution before we get into it. Now, back to the good stuff. Here are some things that you can absolutely leverage throughout this year, right? If you haven't thought about it yet, but it's also something that you can bring up to your tax professional if you are planning to have somebody do your taxes for you. If you are a business owner, that is the best possible way to be able to leverage as many credits and deductions in the tax code, just point blank period. As a corporate change maker, as someone who is maybe like a 1099 contractor, etc., you may not have as many opportunities, but still you want to be able to leverage as much as you possibly can to be able to maximize your refund and or take some of that money and reinvest back into your business, back into your I don't want to call it side hustle, right? Back into your parallel projects or whatever it is that you're doing, right? So let's get started. Now, the first thing that you want to do, and this is specifically helpful at the end of the year, so this would have been really helpful like the end of last year, quite honestly, which you can still do, is accelerate your deduction. So you want to do things like prepay expenses like rent, utilities, and subscriptions so that you can claim those deductions throughout the year. Okay, so if you haven't done that yet, or if you haven't tabulated everything, you want to make sure that you are leveraging those expenses in your profit and loss statement so that you can take advantage of those during tax season. Now, what do I mean by that? If you have your bookkeeping done appropriately, you will be able to generate a financial report called a profit and loss statement. This means it's tracking all the income, well, not all the income, but the income and expenses associated with the operations of your business on a day-to-day basis throughout the year in a financial report that you should be able to print out and leverage so that you can see all the money that came in for certain things and all the money that went out. Now, there are other things like liabilities, so any kind of payments for loans or loans payable or credit cards, et cetera. Those types of things would go on your balance sheet, which you also need to use, especially if you're a corporation. But we'll stick with the profit and loss. So again, any of those software subscriptions, any of the customer relationship management, like your Kartras, Kajabis, your Go High Level, your ClickFunnels, et cetera. Those things going to need to be tracked. Cell phone expenses, any equipment that you've purchased, like a laptop, iPad, any of those things to do the day-to-day operations of your business, et cetera. These are the things that you're going to want to be able to claim and take advantage of during tax season. Number two, you want to definitely make sure that you're able to maximize your retirement plan contributions. Now, back in corporate, if you're a corporate worker, typically they would offer you the ability to do a 401k. If you were really lucky, they gave you matching contributions, right? So you put in 3%, they'd match you 3%. So you'd have a total of 6% essentially going into your 401k so that you'd be able to have retirement income. Now, as an entrepreneur, you have the ability to do that as well. You can set up a solo 401k. You can set up a solo Roth IRA. You can do anything that you want to, quite honestly, in the form of individual retirement accounts to make sure that, again, you're planning for retirement because at some point you're going to have to retire. That's just the reality. So you want to maximize those contributions. So you can increase contributions to SEP IRAs, which is a gosh, what is it? What's that stand for? Um, I'm drawing a blank, but employee pension plan essentially. And then you are also able to do like the 401k, like I mentioned. Now, 401ks have a much higher contribution limit, so that's something I'd highly recommend. So this year, if I'm not mistaken, it's like $28,000 or something to that effect. And you can double that, right, if you are an S corporation owner. So you can put money in as an employee and as an employer. So you definitely want to be able to do that. The third thing you want to be able to do is leverage Section 179. So you want to fully expense any qualifying equipment or software purchases um, for immediate tax relief, right? That's going to draw your tax bill down the most, quite honestly. So they also have bonus depreciation. Now, last year, we were able to take advantage of 100% bonus depreciation on things like new vehicles. This year, it's 80%, but it's still a really great savings, especially if you had a lot of income come in. And you may not have necessarily had a lot of expenses because you might have been a solopreneur or you had very low overhead. So those are some of the other things you might want to be able to leverage to really draw that tax bill down. Number four, you obviously want to optimize your home office deduction. So if you are a solopreneur, again, you're a single member LLC, you are able to use those home office deductions. If you are a partnership or you have an S corporation or C corporation, use accountable plans. So essentially, the business is paying you back for any expenses that you incurred for the day-to-day operations, right? But either way, you want to make sure that you're capturing things like, again, those office expenses, any kind of pens, pencils, printer paper, printers, ink, any of those things that you leverage, any kind of office snacks, foods, things for employees. Gosh, we already talked about that customer relationship management stuff, your softwares, your websites, any of those things that you incur an expense for operating your business is most likely going to be a tax deduction for you. So again, you want to make sure that you're optimizing that. If you are into real estate investments, you are a realtor, you're a broker, you are somebody who is trying to expand a portfolio, you can do things like invest in a qualified opportunity zone. And that is more of a high level and more of a, strategic type of way to do it. But basically, you're going to be able to defer any potentially, excuse me, reduce any taxes on capital gains for property. So, for instance, if you had a property for a short period of time, you're going to pay capital gains on it. If you hold it for a longer period of time, that capital gains is going to decrease essentially because what people don't want you to do is buy a property and then turn it around right away and sell it, right? So by investing in a qualified opportunity zone, you're able to defer those taxes to a later date. Now, the fifth thing I would say is utilizing the R&D, which is the research and development tax credit. So if you are somebody who has like a SaaS company or you've created a product or something to that effect, and you had to, work with a chemist or you had to work with an engineer for some other reason, or you had to work with some other professional to produce something, you are able to use things like research and development credits. So if you are in any type of those businesses, I highly recommend making sure that you can leverage those, claim them, and make sure that they are applied to any kind of qualifying business activities. Number 8, you want to implement a health savings account, an HSA. Now, the thing with the HSA is that you have to have a high deductible healthcare plan, okay, in order to be able to take advantage of that. But you can put money into the HSA, you can use that for medical expenses, and you get credit for doing that, okay? And the beautiful thing about that is that it rolls over. So it is an investment tool, essentially. You are putting money in there and you're allowing that money to appreciate. So that's something you definitely want to leverage. Harvest tax losses. Now, we've talked about this before too. So if you invested in the stock market, you had an incredible gain, but you also had some losses, you want to be able to leverage those losses to offset any of that gain because you're going to be taxed using on that interest of any of those investments. So for instance, if I bought, 100 shares of Apple stock and I was able to generate, you know, um, interest of like $10,000, that'd be amazing. But I also invested in something like QQQ, which is Invesco, right? And I lost $8,000 based on that. I'm able to offset that. So that's a $2,000 offset essentially. So instead of taxing me on $10,000, they're only going to tax you on $2,000. So you want to be able to leverage that as well. Again, some of these are a little more complex, so you definitely want to focus on working with somebody who understands how to do this. But I just want to give you some ideas and put this in your head so that you're really thinking about it and you're prepared. Number 10, I believe we're at, is deferring income. So if possible, You want to defer receiving income until the next year. So for instance, if you had a big client at the end of last year and they were going to pay you maybe $50,000, instead of having them pay you on 12/31, have them pay you on, January 2nd, so that it's not accounted for in 2023. Instead, it's going to move into 2024. And then throughout the year, you can work on offsetting that income as well. So that is offsetting or deferring your income. Let's see, claiming the work opportunity tax credit. Now you can hire from certain groups like veterans, or long-term unemployed folks, or people who may not have necessarily had as much support in getting back to the workforce, to be able to offset some of that income as well. So you get opportunity credits for doing that. So you are increasing the economy. You are adding people to the workforce. You are reducing the unemployment rate. So they're going to give you credits for that. Let's see, optimizing charitable contributions. Now, this is a big one. And you can give up to $18,000 in gifting without being taxed this year. So if you wanted to, say, for instance, give, $18,000 a piece to two of your kids, that's $36,000 that you can write off essentially without being taxed on it. If you want to give to charitable contributions, you can do that as well. If you want to do things like give to Habitat for Humanity or the Salvation Army or anything else like that, you also have that ability. So thinking about those things. And now it doesn't always have to be monetary. It could be, in the form of clothing or vehicles or art, right? Or something else that can be leveraged in the form of donation. So make sure that you're optimizing those charitable contributions as well. Because again, that really helps to offset some of that income during tax season. Investing in energy efficient improvements. So things like green lighting, green windows, doing things like solar panels on your roof, right? Those types of things help as well. So anything that's going to help reduce energy, right, is going to be something that they're going to give you a credit for. They want you to make the world a better place, essentially, a safer place for people. So they're giving credits for that. Depreciation strategies. If you own a home, an investment property, you're able to depreciate that. If it is a single family home, it's over a period of 27 and a half years. If it's a commercial property, it's 39 years. You can depreciate your car, which is 5 years. So there are different ways to essentially get money back on the value of the vehicle that you paid. So leveraging that as well. And again, we talked about accelerated depreciation when I opened this up. When I said special bonus depreciation, you can accelerate your depreciation 80% this year. So if, for instance, you bought a car for $40,000, you can depreciate 80% of that $40K on your taxes. So it's a really great way, especially again, if you've made a lot of income and you don't necessarily have a ton of expenses to offset that income. Really great tool. Utilizing your family in business. Now, if you have the opportunity, you want to employ family members into your business, this is going to allow you to, again, to offset some of the income that you have. So if you have children who are of working age, right? And when I say working age, if you were at least 7 years old and you can do things like help mommy and daddy, gather paper or package products if you have a product-based business, or do things like dog birding if you're a realtor or a real estate agent, or doing things like helping you sort, any of those things, they can be put on payroll. And they can be paid up to $13,850 this year, as of 2023, right, tax year, without being taxed. So if you can do some of that, I highly recommend that as well, because it is an ethical, and legal way to shift income from what you earn to family members and still give them the benefit of having income as well. So I highly recommend that. And again, that's going to be, if you are structured as an S corporation or a corporation, a C Corp, right? Those are the ways that you're able to hire employees. If you're a single member LLC, et cetera, you're going to be onboarding them as contractors and you don't have those same benefits. So you really want to be mindful of how you are set up and how you're structured before you start doing that kind of stuff too. Because there are other, compliance things that you have to focus on, payroll, paying payroll taxes, all of the things. So just be very careful about how you structure yourself before you dive into that. Let's see. You can absolutely revisit your business structure, right? This is a good segue. So if you are structured as a single member LLC and you want to think about hiring employees for the future, you can absolutely restructure yourself into an S corporation. Now, an S corp is an LLC essentially, but you have filed Chapter S election stating that you want to be taxed as a corporation. When you do that, you're able to become an employee and you're able to hire other employees into your company. Now, you do want to have a certain threshold of income before you start doing that because, again, you are subject to payroll expenses, payroll requirements, filing quarterly taxes, etc. And if you don't have enough money for that to make sense, you kind of want to shy away from that. So really just be mindful of where you are. I highly recommend maybe 50, 60K, right? If you have that much money left over after you've paid all of your expenses, then that might make sense. If you've only made $50,000, then it probably doesn't make sense for you to structure yourself as an S corp. So just something to think about. Okay, let's see. Maximizing meal and entertainment deductions. So who doesn't want to be able to write off a meal, right? If it's something for your employees, if it's something for the office, you're able to deduct those. Entertainment expenses. There used to be a time you can write off things like concert tickets or basketball games, etc., but that no longer exists for us, at least not for now. So again, you want to be mindful, but if it's something that is benefiting the operations of your business, then you can write that off. You have client meetings. If you have clients who have come to town potentially and you're going to take them out to dinner, you can write that off, or vice versa. You're flying into a client's city and you're taking them out to dinner, etc. You're able to do that as well. You're also able to deduct those travel expenses. Okay, so you always want to be thinking about how I can leverage being a business owner to my benefit and use those strategies, as effectively as you can. We're almost at the end of our list. So another thing we talked about, or I would like to share, is considering a cost segregation study. So again, if you own property, a cost segregation study can help you with that acceleration of depreciation. So one of the things we talked about before was accelerated depreciation in a vehicle, a piece of property, etc. A cost segregation study is going to tell you how much the land is worth and how much the actual physical building is worth, and you're able to accelerate that depreciation over a much shorter time. So instead of over 29 years, like I mentioned, or 27 and a half or 39 years, you can take all the depreciation at one time. Now, obviously, it can only be done once, right? Because it's accelerated. But again, another great way to do that and offset some of your income if you have a really high revenue year and you're not sure where you're going to get some of those expenses to offset. Let's see. State-specific tax credits. So depending on where you're located, some states allow you to have tax credits based on where you live. So being able to explore those and keeping track of that is something that you want to do as well. So local and state tax incentives, again, for employment, for business owners, for all types of different things. Make sure that you're researching that and working with somebody who specializes in that as well. Let's see. The final thing I'm going to say is just stay informed of any tax changes, right? Any tax law changes. So again, if you're doing this yourself, you want to make sure that you remain abreast of any of the changes that are happening in the tax laws with administrations, and you want to be able to leverage any of these opportunities for savings. So I know this was probably fast. I know this was a lot of information. I'd love to be able to support you in this. If you need some support with your tax preparation, your tax compliance, your planning for the year, make sure that you book a call. Make sure that you're here to have questions. If I can support you in any way, shape, or form, feel free to reach out. I will leave my contact information. And I just look forward to everybody having a stellar tax season, right? There's no need for you to be stressed. When you connect with somebody who can support you and guide you and partner with you through this tax season, it should be a breeze. So good luck. And I'm looking forward to hearing how everyone is excelling through this tax season. All right, everyone. Talk soon. Bye-bye.